So good afternoon everyone, my name is Amancio and I will be continuing the reporting. So in my part, I will be discussing about investing procedure. So in investing na 5 ka step to follow. Ang kinanahan is that choose a stockbroker. So unsa man ang stockbroker? So when we say stockbroker, they are the one who have access to market report and studies and will give an on-time delivery of important document. And also maghatag sa silag mga advice sa mga investment activities. So ang pangutana is that asa na to makita ang stockbroker? So makita niya to sa PSA because the PSA has the complete list of information about trading participant who are authorized and qualified to trade securities for you. So if ever na kay plano nga mo invest, then ato ka sa PSA dito ka mangita og mga stockbroker. Then after makita na kag stockbroker, then mo kana ka sa second step. So unsa man ang second step? So the second step is open an account, fill out a customer account information form, and submit identification paper for verification. So after na to maka-fill out sa customer account information, din ma-submit for verification, din ang stockbroker will assign o mag-assign siya or maghatag siya o sa ka-trader or sa ka-agent o sa ka-investor, wherein katong agent is the one nga mo assess sa ka-investor in either buying or selling any listed security. So some stockbroker have an online trading facility that allow an investor to post order by themselves, but not necessarily a disadvantage because dili gamay ang understanding of how the market or the stock market work or operate. So ang katulo is that give the order to the trader and then ask for confirmation receipt. So if ever gani ang usa ka investors na ay paliton or ang usa ka investors na ay baligya, then ang order is ihatag na siya sa stockbroker dealer. So after that, magkuha ta ng sad og confirmation which can be done via phone, email, or online as soon as possible. Ang ikapat is that P before the settlement date. So the delivery or payment shall be made before the settlement date of transaction days plus 3 working days. So the delivery in case ang usa ka investor is the one nga namaligya, or the payment in case ang usa ka investor is the one nga namalit. So for traditional stockbroker, the settlement of transaction is usually done after 3 working days from the transaction date. This means that the transaction done on Monday, then the payment shall be received by Thursday. So naitulo kadlaw from Monday to Thursday. Meanwhile, for online stockbroker, the settlement of all transaction is done on a transaction day. So same day. So if ever gani ang transaction date is Monday, then the settlement date is also on Monday. So same day ang transaction date and the settlement date. And the last step is that the investor will receive from his or her broker either the process of the sale of your stock after 3 business days or the proof of ownership of stock you bought. So, hali nga part is that dili na madawa sa usa ka investor ang iyang stock certificate if namalit siya, or ang iyang proceed if namaligya siya. Then that will be the investing procedure all about. Then mo forward na ta sa the trading cycle. So unsa man ang the trading cycle? So this is the cycle between the buying investor and the selling investor. So di ba ang buying and the selling investors na ay iyang broker. So ang kanang broker from both parties is mag-interact siya sa PSA. So ang PSA mahimong marketplace wherein ang duha ka broker from the buying and the selling investor will interact or mag-abot. Then the SEC per the clearinghouse are the one who manage the settlement between the two parties. Then the depositor, the PDTC, are the one who is responsible for the transfer of fund via settlement bank. Then after ang fund is transfer sa settlement bank, then makuha na siya sa broker, madawa sa broker, and then the broker is the one nga mohatag sa fund or the muhatag sa fund sa ilahang investor, the buying investor and the selling investor. So muna ang trading cycle all about. Then the PSA trading hours na market PSA. So kana is the mga schedule nga gina-follow from 8:45 AM until 3:30 PM. And in the bird lot system, unsa man siyang bird lot system? So ang gamit is that equity trading is done by bird lot or run system. The bird lot table nga ato makita determines the minimum number of shares an investor can buy or sell at a specific price. Therefore, the minimum amount of the initial investment varies and will depend on the market price of the stock as well as corresponding bird lot. So muna ang bird lot system. Muna per mania. And then we'll go to the trading or the transaction fees and taxes. So the first that brokerage commission. So nanay word nga commission. So mo na ang kwarta nga madawat or the commission nga madawat sa usa ka stockbroker. So ang usa ka stockbroker is compensated for his services in executing order on the exchange through commission which are paid by both the buyer and the seller. So both the buyer investor and the seller investor. And then the upliftment of the withdrawal fee. If a buying client offers a stock certificate to be issued in his name, he must request his broker will then issue the request through the PDTC system. And then the PDTC system, well, kanang mga og 50 para bahid sa pag-issue sa usa ka certificate. Then katulo is that the cancellation fee. If a seeding client has a physical certificate, he must have the certificate converted into a book entry form in the PDTC system by requesting through his broker a direct transfer of DT with the transfer agent which costs 100 plus 12% bond per certificate for the transfer of ownership of share of to PYTC nominee corporation. In addition to the DT fee, a client must pay a cancellation fee of 20 pesos plus 12% VAT to the transfer agent for the cancellation of the certificate to be lodged in the PDTC. So this applies only to listed equities only. Then the stock transaction tax. So sale of equities listed and traded on the exchange are subject to a stock transaction tax of 1/2 of 1% or 50% basis points of the value of the transaction charged to the seller instead of the capital gain stock. The sale, barter, or the stock listed and traded at the PH are exempt from the documentary stock tax. And lastly is the withholding tax. So Filipino citizen or resident alien has 10% of dividend received. A non-resident individual engaged in trade or business in the Philippines, 30% of dividend received. And ang non-resident individual not engaged in trade or business in the Philippines is 25% of dividend received. Then ang non-resident foreign corporation is that 30% of dividend received.
So, good day everyone. I am Tesing Ram and our topic is all about Chapter 7 Stock Market. And I will start at buying stock on margin. So, buying stock on margin is in investors who want to buy stock but do not want to pay the price in full can finance their purchase by buying on margin. So, buying on a margin lets investor borrow some of the money needed to buy stocks by setting up a margin account with the broker. So, usually ang brokerage firm either lends the money or arrange the loans with another financial institution. So, an investor is required to deposit a sum of a money called initial margin. So, ang initial margin is the amount an investor must pay in cash for securities before the broker will lend the money to that investor. Ang also sad ang initial margin sad is designed to protect the broker against a fall in the value of securities to the point that they no longer cover the loan. And nasa ilain nga kuan is what we call ang margin account. So ang margin account ay ang maintenance margin. So ang maintenance margin is also known as an variation margin. So it represent a specific minimum amount of cash balance that the investor must maintain in the margin account daily to continue trading in an open position in the future until the security is sold. Also, ang margin account serves as a reassurance for the broker that the investor would pay back the amount or will not default on the expected fluctuation in the price of the security in case of trade goes against the investor. So the minimum amount of cash or approved margin collateral that must be maintained in the margin account again depends on the limit set by the individual brokerage or authority in a particular country. So lagi if the balance in the margin account falls below, so the maintenance margin that or the investor will get a margin call. So ang margin call it is a request from the broker to deposit additional fund in a margin account to meet the maintenance margin requirement before the next day's trades can commence. So next is trading process types of order. So when an investor instructs his broker to buy or sell, so there is an order. So first, So there is an order. So buying or selling stocks may use traditional form and through online trading. So first is ang traditional way of buying and selling stock is by calling the investor stock brokers to take buy or selling position. So another way sad is ang kaning number two as ang online trading. So ang online trading is the investor will execute the buying and selling of stock without no need for any stock broker. Ang for the sake sa investors had for the investor they only need to open an account with the stock dealer or broker and use their online trading platform. So most dealer or broker is kanang nana sila is tanang stock trading. So kay para less cost og dili na need og stock brokers to entertain clients. So next sad is ang types of order. Ang first type of order is a market order. Market order, it is an order to buy and sell shares immediately. From the word immediately, so ibaligya or paliton siya dayon. So it usually takes place in a fast market conditions. So dinalian siya nga pag buy and sell. So for the case of a broker is they will try to get the best price available and transaction will be completed as soon as possible. So the next type of order is ang limit order. So ang limit order, it is a request to buy and sell at a specified price or the limit or better. So ang main kontra dyan sa limit order is at a specified price. So dili siya pwede above or malapa siya sa kanang specific nga price. So the third and last type of order is ang stop loss order. It is an order to sell a particular stock at the next available opportunity after the price of the stock reaches a specified amount. So sa stop loss order ra kay if ang stock price is decline siya, so it should be sold immediately so to prevent loss. So the next nga slide sad is kaning market price per share. So market price ay sa diri day nga part dia is mostly kung ano na siya diri kaning solving, so dili na kay siya ma-discuss gani. So ang market price per share, it is the current selling price of the stock as perceived by the market, while ang market capitalization, it is the total market value of all of a company's outstanding ordinary shares. Next is ang dilution of the earnings per share. Dilution of the earning per share is the with the increased number of outstanding shares, the ESP will result in dilution. So it simply means nga if ang earnings per share is mo decrease, so ang outstanding shares will increase. Next and last is the valuation of stock or dividend discount model. So valuation of stock is the value of the common stock may be interpreted by the shareholder as the present value of an expected stream of future dividends plus the present value of the future price of the stock at the time of sale. Sa valuation of stocks is ang investor is ang nag-assume sila if is ang investor is magbuy siya og stocks if when they believe nga ang market price is undervalue while mag-sell sila if ang market price is overvalue. So for further explanation is pwede rin ninyo i-scan yung book since more on solving mo na siya, and that would end my reporting.
So, good day everyone. I'm Hazel Jane Canumay, and I will be the last reporter for Group 5. Now, let us proceed to the growth factor. So, the growth factor, or growth in simple terms, refers to how a company increases its works and operations. Growth is realized through the infusion of new capital, and this can happen in two major ways: by issuing bonds or new shares of stocks, or by merging with another company. So when a company grows, its total value and size increases. But if existing shareholders don't participate by investing more, their ownership percentage gets diluted unless the company issues bonds instead of stocks. And there are two main factors attributed to the growth factors, or the two main sources of growth. First is the external growth. So this happens when a company raises funds from outside sources such as issuing new bonds or stocks. Second is internal growth. These occur when a company reinvests its net income either partially or fully back to the business instead of distributing it as a dividends. And when we talk about growth in stock valuation, we usually refer to internal growth rather, because reinvesting earnings helps increase future profits and the overall value of the company's share. And there are three types of growth. First is the no growth, the constant growth, and the variable growth. Let us first discuss no growth. So this assumes that dividends remain constant over time. There's no increase or decrease in the amount of dividends declared, thus, it has a constant amount of dividends declared. In this case, the stock is valued similarly to preferred stock. So the formula simply divides the expected dividend by the required rate of return since the growth rate or the G is equals to 0. And then next is the constant growth or the Gordon growth model. In this model, a fixed percentage of net income is reinvested into the company, and as a result, dividends are expected to grow at a constant rate every year, so constant growth. The growth rate must be less than the required rate of return to be valid. So the growth denoted by G is the growth rate of future earnings and the growth in the common stockholders' investment in the company. So for this model to be valid, the following conditions must be or should be met. First is the dividend growth rate must be constant. And second is the discount rate must be greater than the growth rate. So this model is ideal for stable companies with predictable growth patterns. And then the last one is variable growth. So this model applies when a company experiences rapid growth for a short period before returning to a normal or stable growth rate. So this often happens when when a firm launches a new product that performs very well initially but later faces competition. So as a result, reduce ang ihang growth over time. So these types of growth is you can read your books to check the formula for this type of growths. Kaya naman ni siya equation para ma-further understanding niya siya. Next is the stock rights. So stock rights represent an option for the existing stockholders to acquire additional shares of stocks at a specified price in the future. So stock rights are options given to existing stockholders to buy additional shares at a specified price, usually lower than the current market price. So, this privilege is known, we have here the legal term for this stock right is the right of preemption. So, is n- this privilege of the shareholders gets the first chance to maintain their ownership percentage before the company sells shares to the new investors. So shareholders makareceive sila og notice about the stock offering, and they can choose whether or not they exercise their right. So if they exercise it, they prevent dilution of their ownership, and if they don't, new investors can buy those shares instead. And there are two important terms to remember: rights on and X rights. So rights on, when a stock is bought for days before the record date, the buyer receives the stock and the rights. So, ang timan-an lang sa rights on kay gipalit siya before the recording date. While the X right is it happens when a stock is bought within 4 days before the record date. The buyer does not receive the rights. Stocks rights are transferable, meaning they can be sold, traded, or allowed to expire. So diri sa X rate kay ang imuhang agtimanan ani niya is kay within 4 days na siya gipalit before the record date. And next is the value of right. So the value of right is determined by difference between the market value of the stock before and after the rights are exercised. So the market value of the share immediately before the exercise of right is the market value of the share right on. The problem is getting the value of right is actually on the determination of the theoretical value of the share x right. So to maintain the same ownership proportion, stockholder can calculate how many rights are needed to buy one new shares. So this helps protect their investments from dilution. And that is all our report for today. Thank you for listening.